What we're looking at here is the E-mini S&P producing a short signal from the sell one level on the daily data that we came into today at 31.99, and the artificial intelligence basically the first time that it touches this level, it activates a setup, and it tells you, and it prepares you. First of all, it tells you that do not buy above the sell one level because you only have a 10% probability going as a buyer from that level. So the highest probabilities to trade basically is by identifying the short signal here, and that's on the close below the pivot level of 31.99. The first time it touches that, it's a setup, it's an alert. The second time it closes below, it activates the trigger point. And as you can see here, it's been activating the trigger point several times actually since last night, and we finally got into this signal here at about 11:15 a.m. or so, and we activated the short trigger. We are short the market. We activated a couple of contracts. We are short. Our average price is 31.98 in a quarter. 38.99 and the third roughly in there. The stop is 31.99, and one of the things that I teach my trader subscribers is basically not to use trade stops. We have a very specific methodology that we use when we use stops, and it depends upon basically the individual client profile, financial condition, and risk profile. And so what I do and what I say here is for conservative traders that want to take limited risk or minimal risk, you can put the first stop on a close above 31.99 on the 15-minute bar. Make sure that it's the 15-minute bar. That would be the most conservative stop. The second stop is actually a stop that I recommend my traders to have, or anybody that trades, that you should always have what I call a catastrophe stop. And that is a dollar amount that you are comfortably able to afford to lose. And so if you come in to the floor with that already in place, then you can manage the trade a little differently depending on volatility that day. And so for conservative traders, you can use the stop on a close above 31.99. Second stop, use a dollar amount that's comfortable for you. Now, the reason why the artificial intelligence tells you that you have the flexibility to do that is because when the price reaches the level, sell one level is a 90% mathematical probability. The algorithm gives us a 90% probability from there. From the sell to level, in this case, is 32.27. It's another points higher. It gives us a 95% probability. So the way I'm trading this, I'm managing my contracts here on a close above 31.99, because holding it up all the way up to 32.27 might be a bit painful, and I don't like pain. Also, the artificial intelligence identifies for you that when the market is trading in the red level of the area of distribution that you see here, it it's telling you to look out for supply, look out for possible sellers to begin to show up into this area. And the higher the price goes up into the sell 2 level of 32.27, the higher the probability that we will find some more sellers. And the artificial intelligence tells you, wait till the price reaches that level, it crosses it, gives you a setup, an alert, and then it closes below. That's your short trigger point. Let's take a look later, see what this signal does as we continue to trade live streaming right here in Tocker. Talk to you soon.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VC PMI, is an automated AI trading system developed and tested over a decade. The VC PMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VC PMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VC PMI algorithm. The VC PMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VC PMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VC PMI? The VC PMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VC PMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VC PMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.